Hello, Anton Hopfel, Manappa, and this is the recap of today's Bund session. And I have a very good example today for a lousy trade. And you see how interesting it is to see the little nuances, what it's make a good trader, to have your routines like being concentrated and staying with your system are only few of them. You know that I separate or I make I trying to separate two different, let's say, kind of trades, so the lucrative and the lousy trade. And today I wasn't concentrated with the open, and I made a lousy trade. Even it was good handled, it's not worth the time because it was lousy. And I tell you, what are the criteria for me to say it was a lucrative trade or was a lousy trade? But we will talk this later in a few. First, my hypothesis. Hypo number one, range short level is higher pre-market volume cluster. So this is my very interesting level where I see if they short stay alive, I want to see them when they pull back to this area at 172.80. I want to see responsive selling here. I don't want to see already aggressive knocking on the door from the long side. Hypo two, the short play. Strong selling initiative. If we see strong selling initiative towards the 62 level, I would go for targets 52 plus. Plus means we look here at the chart. If we go here, I need to see that here at the low of the day from the overnight session also, that we get in below with pressure continues. Then we have a chance to go even here to the 18 level. And three, the long play. That's like then the list, the same level as hypo one. That means if we don't see that here's responsive selling at this level, that means below the 80 or at the 80, and we don't see that they knock on it already very strong, we go here for the short. But if we see the opposite, that means we see strong buying power towards getting through the 80 and pulling back, and then must see that the continue of buy power at 172.85, that means we do not accept, we don't only advertise here higher, the price not only advertising above this edge of 172.84, this area here. That means we have a good probability with the pullback or with the initiative to it, depends on when it happens, to get into this distribution again. So in this main distribution from yesterday to test the VPOC, the 94, my target one, and the upper edge around this 173.04 area to get to the next target. Let's see what happened. And we're going back because it's already the afternoon. And let's see this here. We have our open at this moment. But before, look at the pre-market and look at our levels. My important level was this area around the 80, 82 area. You see here where the pre-market also confirms that they don't trade above it. It stays alive, this area, from a big picture preparation. You see that ranging a little bit around the rotation, and then rotating back, we see this is the main value here from the pre-market. Here's the volume edge, the lower and the higher. And you see that with the open, we trade through. And then something was happening. You see, they pull back. First, they get through with a lot of initiative. Already here with the open. They pulled them back. Even a little bit absorption. From this moment on, you see selling continues, but not more effect on the price. And initiative coming in again. The moment one could have opened and get into my hypo 3 long play. What did I do? I was not concentrated at this moment and thought, wow, this data is very looking good for responsive selling. They trying to get above, sold, tried again, and big selling again. And you see now what is happening in your brain. In my brain, which obviously one is a good thing, that my visualization in my brain is working good and tells me, now this could be the sign for responsive selling. But the difference is, now see how funny this is. If this takes place at this moment here, around this area, this would have been a good sign to go for the short-term short trade that I prepared to getting back here to the value edge to the other side. But what I didn't see is this already took place above. And then you have to see it like from the other side. You see that this was not the attempt to cannot get above and get stopped a little bit, getting, let's say, take out risk of your books. And the second attempt also failed and people get more out and getting back, and then whoom, we see that the trap buyers starting already here, getting out of their pieces, and we have the good chance to get back into the range. The funny thing is now when it's happened, of course, after the breakout, that means the buyers are already in a good position and in control, and of course can live when there are some people trying now either to get out of the position or trying to get lower again to trap those buyers, but they were still in the comfort zone. I didn't see this. And I had to pay for this because I saw, of course, all right, now after this second candle here, the selling was absorbed, and I saw at this moment, oh damn, it's absorption, and I knew at the second, wow, a very, very, very fast stop out then display. Something you see very often when I remember back when I start to trade, one problem when you see that you're not good at working at your big picture level, or not good at the levels that are more significant, very often you get stopped out immediately, very fast, because you're just totally wrong with your idea. Something that I really like kind of observed, this feeling coming up from the past when I had this things happen very, very often to me. So another sign, of course, I was totally wrong because this was already a breakout, this was my big picture level, and even this was my prepared play, holding, then stepping back to the 85, look at this, what had happened, look at my hypo, initiative coming in again, and we're reaching target 1 and reaching target 2. Yeah, that's a good example. And now what I said before, I want to tell you what is then the criteria for a lucrative or lousy trade. So lucrative would be, first, I need to do my morning routine. I need to do my trading mantra, for example. I do my routine means when I get up, put on my PC, then I make coffee, then I'm coming back, start my analysis for the day, then I'm going back to make a breakfast, then I make my trading mantra, then I do my meditation, and then I start trading. Then, that's the first thing that have to be to say, even now I'm allowed to make this day. Before, I try to get at least 7 hours of good sleep, and I try to get as many points green in this list as possible. So when I see a majority is green, and this every day, and then I say, oh, that's my routine. This is the mindset I need at least to start even the day as trading. Then the second thing, we go to the levels. Where do I trade? I only trade where is the big picture prepared. When I see an opportunity, and as I am testing in the Bund market since 2 months, special plays where I definitely need to test them in context to the big picture because I want to see statistic what this can give me. I only can trade at these levels. This is the second thing. This has to be, or it's another lucrative trade. Then when I play my trade, I have for every kind of market, let's say we have the setting for a range market, or we have a setting for a more trendish market, so we're below the value of yesterday or above the yesterday value. I have different plays that I can use then that are prepared in context to the big picture, let's say preset and the developing market. Means starting with overnight, then the 8 to 9 session, my pre-market, the old Eurex session from the pre-market. And then the next thing is micro picture. When I trade at this level, everything fine. When I did my routine, everything fine. But now in the micro level, I need to take care that I take my plays like prepared in my playbook. So that means for this play, for example, let's say this would have not happened above and was not a breakout, but happened here. So that's what I thought because I wasn't concentrated. Think of it. Then this one played right because I'm waiting for at least a double rejection. I want to see they try, push it, like think of it, this would have happened like here. I want to see then that they trying to get again to this area. You see a little bit let's see here. You see people getting here to the top at this moment. You see they trying, but you see already responsive selling. And I wait for a second test to the upside. This happened here, and you see it doesn't work. And it's even a divergence. And then selling coming in. So that means I want to see 2 times, and I'm measuring 30-second time frame. For me, you can do totally different, doesn't matter. You just need to prove that it works. So that means I would be allowed here to take on a position. This would be around this moment, so around the 78 area, the top at 81, and my stop would be 2 ticks above. And of course, when I go with option theory, I want to trade through this whole range here and getting back here to this area, to the volume edge around the 72, 71, 72 area. So I get in this trade, and now I have a stop rule. I wait now for the impulse phases. That means the phase that pushes by market orders into the trade and want to see that this is also following up. This is like the textbook visualization you want to see now for a special trade. This would be the range trade, short. So I wait for this. I entered here, I see a little bit, still not enough power. They get a tick closer, a little bit green. That means a little bit delta is not bullish, but it's a little bit more neutral. And then an impulse phase, boom, 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 and push it directly to the downside. This is now a sign when the impulse phase is coming and you see the price, the delta has effect on price. It means the selling really doesn't meet absorption by the bulls. Everything is fine. You can now pull your stop closer. In my cases, when this impulse phase is coming, like here, then I'm allowed to pull my stop for me at the around this entry level, or more exact here at the extreme from this range play where we were. So only then a smaller risk. And if I then get filled, I had a risk like my risk would be like common, let's say 3 ticks about. I starting with 5, at the end I can have a risk of 0, 1, so 1, 2. So in the middle it's around 3 ticks. And I know what my trade now, where's the target area, and I can calculate if I get this kind of trades, I know I have to have a risk reward of at least 1 to 1, and then I have to have with the costs at least a 70% hit rate, for example. If I only would trade this kind of scalp trades, which I'm not doing because I'm also going for the momentum trade away in the big picture from value to the next value. Anyway, this is like the principle. If I all keep these rules, how to stop handling, waiting for impulse phases, don't pull stop to close, don't now pull the trigger closer because I said I need to have this reward when having this hit rate to make money at the end. That means I'm not allowed also to pull my target closer when we are in this impulse phase and try to get to this low here. Maybe I would not get my contract filled here because we only touched it by tick really exactly before the LVN here, this area. I don't know if I would get it filled here, doesn't matter, but my risk is now, let's say there's no more risk in this trade because as I see impulse phase 1 was coming, a second try with this move here and get totally absorbed. When I see a next impulse phase, this is my rule then, impulse phase 1 keeps us in the game. We see some pullback, they have a chance still to get a little bit closer, to get filled for my distribution target. You see this was happening here as there was then rejected. Okay, this was a sign of no way, they don't want to get here deeper because buyers already absorbing here and coming in an aggressive market buying, but my trade now would be at entry level. So it's better than for me to say I still give it a chance because it's no risk anymore in this trade. And I have a little less expectation that this still could happen. Of course, when this doesn't happen, the chance is really, really small. But no matter what, you have to find out where is a target area. This is high probability to be reached with a trade. Because if it's never reached, then you can handle your trade as good as you want. You will not have mathematics that will against you, and you will not make money at the end. Anyway, this was not the thing. I played this here and I thought I was at this area, I was not concentrated, and this was a mistake. So this was a failed trade. What happened then with the market? Sorry, this was a lousy trade. I call them the lousy trades. You see the market played this, get through all this area, see reach the higher distribution edge. You see also here's the LDN of the bigger distribution edge from yesterday, where they made a short break with the American session, with the US session, and they pulled back. So this was the area here of the LDN starting here and getting up to this major level here. This was the more prominent LDN yesterday, the area around 173, 13, 14. So they tested this area, possible, let's say, when you look here, finding acceptance, possible unfair area again. But first, they tried to play it along. They pulled back to these areas, and you see that they did accumulate because a lot of people were selling again and again into this level. And there were also attempts of people buying and get above and get higher, get in the next area, because there was the next VPOC, the next minor PSC was at the 24 level, but they couldn't make it. And you see, They prepared liquidity here, and at the end they failed. They tried it again and again, and this was like, now we're getting closer to the noon hours. It's 10:30 right now here, and then you see they tried so many times, but they just had a balanced phase here. But at the end, the sellers were stronger. And what will happen from the auctions here when they cannot find acceptance and fail? We wait here that they dip into this area again. What they did, normally I would look then for a smart pullback, little pullback, and look then here for the re-entry into this area. There was no opportunity. From my play, it couldn't be played. It could not be played. But at least you see where they're searching now again for acceptance. You see all the time this gray rectangle I let in. I kept this here because this was the yesterday lower value edge and the higher from the main distribution. You see where they're trying to find now again acceptance and say, okay, this was already a fair area yesterday. Let's see when we dip into the breakout area where today the breakout started, the 80 areas, 80, 84. And you see this is then also, of course, when there's nobody now can advertise lower or can push price even in the next lower level. You see then you have to wait for the signs that they are responsive here and getting in, and we are back in this area. And this is what basically happens until this moment where you see they are advertising lower the first time here, pulled back, weren't able to play the range long, and then it's the same thing. You always wait that normally you want to see responsive buying. Okay, you maybe saw this already here. I didn't see this because see how prominent delta pushes into this level. You even had a pullback chance to be sure that there is no more buying coming in. And of course they tried some little buying, but you see after within seconds, boom, initiative coming. That's the same thing. And then you say, all right, where were we before? Where was the last level? Where is the before POC? And when you go back here, you see there was the pre-market POC, was around shifted, started here from the 74, get up 77, 79 area. You see the LVN, you see this lower area where they pulled back already in the pre-market. And now look where from yesterday. So acceptance couldn't stand in this area. A lot of initiative shows us there was a probability that we get back into this range. That means you have also probability in auction theory. We're looking again for the fair price that appeared before. So this area and also the lower range, you see exactly traded, staying here, find at least a short-term agreement. But you see already here starting to fail. And then see next target area, then the next POC 72. And you see what happens here. Okay. At least we test this area and we go back. And now the market built its own value and filled out these empty areas and built its own value over the last hours of the morning. And after testing this POC again, you see how it turns. It rotates now from this side downwards. And as we had this, now this area of support of the last value shifted now. They advertise this lower, not said that this will be confirmation that we get to the next lower distribution. You always want to see they pulling back, look what is happening, because this could be an excess as well. And if it's just an excess and you go in already here, you're trapped because boom, and get back into this area. But what is good to wait a little bit to see, all right, advertising of price lower. We're pulling back, you see a little bit trying to get into this area, see here, very good, and then boom, initiative started again. You can also think of when I go in here, here's the last extreme, put your stop a few ticks above, and then that's the next play. And they played it. And then we stayed here and filled this area out, and then maybe some news driven, I don't know what was the reason, but it's the same thing. Even here with the rising volatility, you see that it's just not left with the first try. They always pulling back, and you see then when they pull back here to this area, what you not want to see is now delta is green, or if it's get green, it's not absorbed. And you see they get again and lower and lower. High volatility at this time. As I'm back now at the desk, it's 5 o'clock, I don't know the reason, but that's not the point here for my explanations. Anyway, this is so the pre-market and here the debriefing of today's Bund future session, and have a look on yourself. Try to find out if you're already feeling an edge and feeling you have a good play and it's not still underperforming, but you're on your way. Just try it. What can happen? It just can make you better. Try to make a list and measure your trades and find out, would be this really a good trade? So you can call them a good trade or call them lucrative, but try to separate them and find out which one from my positive trades that brought me money were really lucrative trades and which one was lousy trades, and find out which one of my losing trades were lousy trades, but which one of my losing trades were also the lucrative one. To see at the end, where is really your failure? Is it a mindset thing? Is it a technical thing? And this you only can find out when you not only separate your trades by winner or loser. All right, so no money for me today. I quit then trading because I had a meeting after 9:45, I think. And I wish you all the best. Happy learning. We see you next week. Bye. Anton Höpfel, Manapa.